Chewy is an interesting online pet retailer. The company's revenue growth had been decelerating considerably since the economic reopening. However, the management team said that finally revenue will re-accelerate this year in 2025, and we're already starting to see early evidence of that rebound at Chewy. So in this video, I'm going to update my recommendation for Chewy stock. I'm going to let you know if I think it's a buy, hold, or a sell. Looking at the company's recent years' revenue growth figures, looking at their cash flow, their returns on investor capital, which are remarkable, by the way, the discounted cash flow valuation, which I updated today with new forecasts for its free cash flow over the next several years, and looking at the valuation on a multiples basis on the forward price to earnings and price to free cash flow. I'll do all that in this short video, so let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So this chart for Chewy's revenue growth numbers going back to 2019 really highlights the point I mentioned in the start of the video with revenue decelerating, right? So you had the pandemic, which was great for Chewy. People were spending more time at home. They were avoiding shopping in person, which worked well for its online-only business model. Also, people were told to avoid contact with other people. So something they did more so than usual was adopt new pets. So household pet ownership soared during the pandemic. That was all great news for Chewy. Its revenue growth increased substantially. The number of monthly active customers increased substantially. It was all going very, very well for Chewy. Of course, the economic reopening had the opposite impacts. People started spending more time away from home. They didn't mind shopping in person. In fact, they looked for shopping in person because they wanted to get out of the house after being cooped up for several years. And unfortunately, one of the alarming trends I noticed in the aftermath of the pandemic was that people were returning their pets. They were saying, oh, you know what? This is a longer commitment than I thought. And for some reason or another, people were returning their pets and household pet ownership declined. And that was concerning, not just for Chewy, but just people, when they go to get a pet, they should realize ahead of time it's a long-term commitment. It's not something you should be doing at a whim and then returning your pets because you realize, oh my goodness, this is more responsibility than I want. Nevertheless, Chewy's business, you can see revenue growth decelerated significantly until the most recent quarter. Revenue growth accelerated back up to 3%, and management said that for the full year in 2025, calendar 2025, revenue growth will pick back up at Chewy. It'll get closer to the mid-single digits. Now, Chewy, the management team here is one of the management teams that I've felt has done a great job here, both in going into the pandemic and coming out of the pandemic. I mentioned earlier that Chewy's business was absolutely thriving during the pandemic, but the management team wasn't hasty to make any decisions based on that revenue increase. They didn't think of themselves as the new winner in the pet industry and make all of these investments for expansion and all of these things based on the results they noticed during the pandemic, right? You can't say that for a company like Peloton, which overreacted to the increase in business during the pandemic, as did many other businesses, right? It's hard not to. When your business is booming, it's hard to think of the business in a broader picture and not get caught up in that moment and think, oh my goodness, customers all of a sudden are going to come to my business. And it's not just because of the pandemic. It's a longer term thing, right? It's hard not to go to those conclusions. Chewy avoided going to those conclusions, which was smart. And also, they made prudent moves during the pandemic, not to expand their manufacturing facilities, but to optimize them, to include more automation, to include more robotics, to include better inventory management. Those things that were better cost to serve rather than going after more customers. And I thought that was very prudent. And you're starting to see that in the company's profitability numbers, in their cash flow numbers, trailing 12-month cash flow from operations up to 4.3% from negative levels in 2019. The returns on investor capital have been growing meaningfully. 89% is a remarkable number for Chewy. I don't expect this ROIC to remain this high for much longer for Chewy. The company's been able to, like I mentioned, they didn't invest in expansion all that much. They've been able to go into new categories without needing to put out large capital investments. And those opportunities will quickly vanish, and they'll need to put out more capital if they want to generate revenue growth and go after the sizable market opportunity. Remember, the pet market in the United States alone is over closer to $110 billion annually. Chewy's revenue is only a small fraction of that, less than 20% of the overall market opportunity. And they're expanding into Canada, which is a whole another market with billions more in total addressable market opportunity, which they're going to want to invest in to capitalize on. So they're still in the early innings of growth, which is going to require more capital investment. But they're doing so prudently, which investors can appreciate. They're not just going after growth at all cost, they're going after profitable growth, which is what I like to see. I don't like to see companies that are just going head over heels and just investing in everything and anything just to capture a larger market, just to gain market share. Maybe that market is not for you, right? Every business needs to choose its customers. You don't go after every single customer, right? For that same reason, you don't see me making videos about meme stocks, going after the viewers that like to watch videos about GameStop or AMC or any of these penny stocks and things like that, right? That's not my market. That's not the type of investors that I want to encourage, that type of speculating and what I see more as could be seen more as gambling rather than investing, right? I like to give investment research, not speculation research. And so every business has to choose their market, which Chewy has done well. And I like to see that. I like to invest in companies that know their market and go after their market, customers that they can serve profitably, not just customers for the sake of customers. So let's start looking at valuation. Chewy stock on a forward price to earnings ratio at 21 looks relatively cheap. On a price to free cash flow basis of 39.88, that looks more fairly valued for its business, for its prospects, right? This is not a software as a service business, so it's not going to generate very lucrative operating margins or very lucrative cash flow from operations to sales numbers. This is an online retailer that needs to invest in logistics for shipping and handling, inventory management, the robotics, the automation technology, all of which is relatively capital intensive. So a valuation, you're not going to see a forward price to earnings in the 50s, 60s, or 70s. That would be too high for this type of business. Now, I updated my discounted cash flow valuation model for Chewy stock today on March 12th, and I upgraded the intrinsic value per share yesterday before I made this update, or even this morning before I made this update. The intrinsic value per share I had calculated around $34, $35. After the increases in the free cash flow expectations over these next 4 years, 5 years, the intrinsic value per share I upgraded to $43.65, which compares favorably to the current market price of $33.26. Which leads me to the conclusion of this video, which I posed in the headline: is Chewy stock a buy, hold, or sell? I updated my recommendation and I have Chewy stock rated as a buy. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.